Good morning, traders. Welcome to today's market review. This is Razak at CMTrading. Today is June 19th, 2017, and today is Monday morning. So looking at the economic calendar today, let's see what's gone on the agenda. So for Monday, June 19th, there's no major news scheduled for today, but there are some things that are going on. So let's look and catch up to see what's been happening since last week. We're going to first take a look at the Euro USD. We love the Euro USD here, and it's trading exactly in the middle of its range. A little bit of a resistance level, I would say a minor resistance level at this level. And we've just been, let's set that up actually. We just have been, we had this nice toss below the support level. We said that it may hit 1121. It didn't, and it took it up higher. Now, what I don't like about this is that it's not really taking it up higher a little bit, 112.11-ish, 112.30-ish. It's staying in this 111.80-ish range. So I'd like to see a continue buying here, okay? If you do see it dip to 111.68 again, it might be a good place to actually pick it up on the long side. But we're trading within this 80 pip range between this upper limit and this lower limit, and we have these like this gray area, which I don't think anybody should actually get into, just because there's no real trend that's developing here. We've been trading in this range, and your best bet in trading for the range is to play the higher probability trades, the buying on the support level, selling on the short, selling short on the resistance level, and just taking the dip. Now, that you could make a healthy income like that. I mean, we've been seeing this since since it's been playing itself out here since May, the beginning of May actually, since we rallied. So let's see how this unfolds, okay, and continues trading throughout the week. It may be a quiet day for today, but keep an eye on this. If it does dip to 111, maybe a possible buy. Like we're looking here at the GBP USD, which is another case in point where we had this tremendous sell-off last week, and people in the office started taking bets how further down it's going to go. Is it going to go back to 121? And sure enough, it didn't. Okay, it respected its level. It was in news. It was a reactionary move to the elections. Things are still, as far as we know, still headed in the Brexit mode, the Brexit direction. So it's just a matter of some uncertainty with the GBP right now. So until we have the dust settles, I think we're going to slowly bring ourselves back up here. But as you can see, we've hit this resistance at this level of 127.73. Now, if we do break above it, then we could definitely see ourselves correct to some of the levels that we were at before the sell-off. So that would be 128, 129-ish levels. So keep an eye on this as well as this unfolds. We're looking at the Aussie USD here, a nice retracement. Okay, we're back to the previous rate decision where we had it just about right here in the beginning of April, and we've made a full recovery since then. So at this stage, it might be a good place to actually short this as we're hitting a little bit of a resistance, previous support levels. So it might be actually a good place to actually sell this and in the anticipation it's going to correct itself after this nice rally and bounce up. Looking at gold, a nice retracement, 1251. We're selling off. Next point of support, 1248-ish, 1250-ish. So just keep an eye on this. Remember, we rallied from 1220 here, okay, and we rallied, quite hard over the past month. Now we're looking at a daily chart, but looking at here, since the beginning of May, we rallied to 1300. So the fact that we're just slowly selling off here is just indicative of the markets being very strong, less demand for gold in the summer, so on and so forth. So you could read into it, whichever way you want to read into it. But the chart will tell you what the situation is. And right now we're a little bit weak in gold, and we're just taking small little sells. Now the political and demographic situations in the world might resurface, and we might find ourselves again just popping up. So just keep an eye on this as this unfolds as well this week. Looking at the Dow Jones, we're at all-time highs here. Okay, 21,381. I sound like a broken record. I've been saying this for every week. And we just keep on churning up, churning up, churning up, churning up. I mean, this thing could go to 25,000. I'm just throwing a number out there. With deregulation in the United States, the way that President Trump is presenting his financial, regulatory standards in the United States, it's much more open to free trade. Obama and some of his predecessors, President Obama and predecessors, kind of limited it, controlled it for good reasons. I'm sure they had good reasons. Not challenging each one's motives. I'm just challenging the perspective of it and the outcome of it. So the question is how much further we're going to go up. That's the million-dollar question. At this stage, it's really hard to say. We just feel like we keep on going up and going up and going up. Stocks are strong, and this is during the summer months, so this is really unfounded. We sometimes make corrections in August, September, October. So just keep an eye on this. If you are long the Dow Jones, that there are correctional moves that happen during those months. We're not there yet. Okay, we're still in June, July coming into, and this is historically quiet months for the indices. So, we look like we're getting more aggressive. The DAX is catching up here, as you can see, 12,724 on the upside. But here also we're trading within the range. Now we picked this up, this bottom level 12,664 last week, and look, we're just bouncing right off of it. A nice 60-point move. Okay, that would have been a really nice move had you picked it up. So, respect the levels, trade the levels, and you'll be good. Okay, this is Fred Razak at CMTrading. Want to wish you guys a great trading day. Thank you.